Hello, everybody. Happy Sunday. Happy Tiff Talks Sunday. And we are back for an all new episode this blooming season in honor of Financial Literacy Month. If you notice, we're back on our original set, which is the pre pandemic set, but we are all the more happy to celebrate and be able to be here with you guys today. So we're gonna get started. During our last episode, we tackled financial literacy in the effect of developing wealth, and we are going to invest and grow our roots a little bit more by adding to that the discussion in regards of credit. So this I know is a very taboo topic. And we have our credit guru with us here today, who's going to share his insight and also just lead us in a discussion that is definitely going to be mind blowing. So thank you guys for tuning in. I'm going to go ahead and introduce myself. I am Tiffany, owner and operator of Tiff Talks, social worker by trade and community activist at heart. For those of you that are new to this platform, thank you for joining us. This is a safe haven that we talk all things taboo, just to dispel some things and bring insight, awareness, and education to really empower our community. And for those of you that are returning, welcome back. Thank you for rocking with us and continuing to rock with us. And I am going to hand it over to our guest today so that he can introduce himself.
Yes, good morning. My name is Gerard Clark. I'm from Winter Park, Florida. I just want to give you a little bit of background about myself. I've been in or around the car industry for about 25 years. I started in 1997. And my first job was at Volvo of Winter Park, where I detailed cars. And I also dropped off courtesy cars for people that was going to do service with Volvo. So that was my start. Then I landed at a Toyota dealership where I became, I started sweeping the floor there, let me say that. I was on the bottom level. I was in college, just trying to make money and didn't kind of know what I was going to do next. But 7 years into that position, I ended up being in management. I ended up being a detail manager first. Then I was a inventory manager. And then I actually became a trainer, which was like really weird. But what happened was I learned so much about cars by touching them. As an inventory manager, you learn model numbers, packages. You learn just a lot of things about cars. My next season after that was actually car sales, which I was really good at, but it was pretty much an accident because the wealth of knowledge that I've learned from touching the cars, learning the packages, allowed me to talk to clients and problem solve with them instead of selling. So good. What would happen is I would say, hey, Tiffany, instead of buying that limited for $40,000, I can put you in a touring for $32,000. We can still get the finance rate, and also we still get technology, the different rims and stuff like that, and your payment will be $150 cheaper. So of course people naturally would say, sign me up on that deal. So my background in finance and understanding these concepts is what is going to allow me to talk to you guys today about this credit builder.
I love that, being able to not sell a car but assist people in problem solving.
That's great.
Because that is what people need. That is what people will gravitate to when they have that. There's a quote that I keep on my desk at work that says, people don't care what you have to say until they know how much you care. And that just in itself will show that you care more than trying to just sell a car. And that's oftentimes the experience people get when they go to purchase a car. So knowing that somebody is coming from a standpoint that I'm looking out for you, that's good. I love that.
Yes.
So as I mentioned, we're going to get into the good fearful topic of the C word, credit. I feel like I should have like a background noise that's be like da 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 da, but we're gonna get into this big fearful word of credit, and I really think a good place to start, because during our last episode we really kind of dove and kind of talked about the understanding of education versus literacy, and really painting the picture in that education is really grasping a concept or being able to understand a concept, while literacy is more so focused on having a skill set. And with knowing those two and incorporating credit, I think the best place to really start so that people can understand and be able to see the purity of it is to really kind of share with the audience how you grew and developed to have this passion for financial education.
Yeah, and it's like I've said before, it kind of was an accident to stumble up on how to impact a transaction in the way that I did. But what was happening was the passion came from it bled into my work, because the transactions that I was a part of, it was more from an analytical standpoint.
Okay.
And those analytics of how to leverage your down payment or get my dealership to get you a good deal on my behalf. What happens there is you start manipulating interest rates. You start manipulating lower finance charges. Finance charges are very important to understand, because you can pay the same amount in the finance charge that you actually pay for the car.
Wow.
If you don't manage that. So the passion came from the victory lap of saying, hey, instead of getting a 10.9% interest rate, we were able to, because I got you a good deal, because I showed you this package that still qualified for manufacturer incentives plus the discount. Now your rate is 2.9.
Wow.
So
that's a big difference.
Yeah, that's a super big difference. It was like, what's my payment? So that the passion came into the understanding that working this way just yielded a better monthly payment. So selling is not my forte. Matching up data and manipulation of finance, that's my area.
I like what you shared about impact.
Yes.
Because I feel personally and professionally, in any walk in life that you have, when your goal, when your mission is to have and to make an impact, then that passion comes so much easier and it's very much so effortless, because you find joy in being able to make an impact, to be able to have a lasting impression on people.
Yeah, we celebrate.
That's good.
We celebrate,
right?
And my customers' reaction of like, man, Gerard, you can't make this up.
Right.
I just saw that for myself. And we high five, we hug it out,
right? And
it becomes fun. But the other part of that is the client walks away with a car ownership plan. So that's why I sell so many cars. I was also ranked 121st out of 6 states.
Wow.
100 sounds high, but when you add 6 states into it, and then I work for a Toyota store that has a store in every single corner. 121st in 6 states is actually one of the top percentages as a client. But that's how I did it. I'm a customer advocate is what it boils down to.
That's what matters. And we were talking kind of offline before in preliminary discussions, and one thing that you said was like really keen to me. And it was like, how is it that this information is not readily available to everyone?
Yes.
And it's heartbreaking to have the experience or to see that the neighborhood from which we've come from don't have that same experience.
Yes.
And like you said, the people that you've worked with, they walk away with a financial plan.
Yes.
Not everybody gets that same experience, And my question for you is, why is that? Why don't the community, the neighborhood that we grew up in, why don't they have access to or have that same experience as other people may have?
Yeah, that's a great question. The first thing I'll say to that is, in my view, in our country, this financial literacy is only impacting about 25% of the country. 75% of the country, they are financially literate. They understand rates and the home ownership and these things. So I want to say that first, because I explained to you before, communities that I've been a part of before, we're high fiving, we're celebrating. But then, like I mentioned as well, I come back to my hometown to bring back all the wealth of knowledge that I've learned by being gone. I basically ran into this question of yours. And in my opinion, we as quote unquote the neighborhood have not understood what the benefits are to be financially literate. In a lot of cases, our people are the neighborhood people. They're such amazing people. They're so good. Like they're so amazing, but you never factor in how to deal with your money, how to leverage your money, how to develop assets and create a financial goal. Now, typically you don't see the benefits of this good profile until you become a homeowner. When you become a homeowner, that's when you see all these offers coming, you see these things, that empowerment, that confidence, that good feeling, that's typically when you see that. So in the quote unquote neighborhood, we don't understand that, or if we did understand that if we're more financially savvy, we would actually be able to build our communities, patronize business owners, and actually grow our communities. So I guess what I'm saying is that we don't understand the why.
You know, I when I was kind of brainstorming and completing my outline, I kind of went back and forth on, is it access or is it exposure? And, you know, hearing your take on it, I think those two, though they may, you know, play very well into that, is definitely about just really having an understanding. And when this platform was created, it was created and centered around being able to have the conversations that we're not having at the kitchen table out in the front, you know, because I say it all the time. I never really knew or really understood, like you said, the why of credit until I got ready to purchase my home. Now, mind you, when I purchased my home at 25, but I knew enough to seek out help a year in advance to go and sit down and talk to someone to kind of come up with the plan, if you would say, or come up with, you know, a blueprint of how to accomplish that goal. Not everybody understands that or even seeks that. And I've always known, you know, my mom and my dad to have good credit, but when it came down to talking about it, it was just like something we didn't discuss.
Now, the other part of this is, now my folks, we're from the country. And what happens there is we pay cash for things. And it's a pride about always being able to afford what you need. Also, my family, my great grandmother, she owned most of the land in the town. So if one of my family members needed a personal loan, it would be because grandma called the bank and said, hey, my nephew's going to come down there, he needs a loan. So it was on a handshake. So that handshake was never reproduced for the newer generation like us. So if your parents were born in the 50s, their parents are who I'm describing. Their parents pushed them through on the handshake, on the word. and your word was pride.
Right.
So that was the glue to get a loan or any other movement that you were going to do in the community. So that's partly why, like you mentioned, your parents or even my parents didn't talk about credit, but if you notice, our parents had this pride about them, but that was established from their parents. So moving forward, we now have to pick these pieces up because we've learned, we've saw, and we're at a point in our lives where now we want to give back.
Yes.
So that's what the credit builder for me is all about.
Yeah.
That previous conversation to help you transition to get there. But because I've been in the auto industry, what I discovered too was the leveraging something that was high dollar.
Okay.
That's the secret sauce to building FICO points.
Okay.
So we're going to get into some of that. Yeah, later.
So a large part of the conversation with our previous guest, Nikki, when we discussed developing wealth, was about being able to have something transferable.
Yes.
Which you definitely kind of opened the door to.
Yes.
And when you discuss things that are transferable, the why for people isn't necessarily to think the thought of credit. But as I've gotten older and as I've done more research for my own and being able to have something transferable, for me, the effortless thing that you can always do is to pass on, transfer good credit to your children.
Yes.
And like, if I knew then at the age of 18 what I know now about credit and being able to have premier good credit, then it would be a different, picture for me. But I've always been able to manage and I have, good credit score. But knowing what I know now, that inspires me to want to be able to transfer, to pass on good credit. And as we really kind of dive into the topic of good credit, I want to be able to kind of start for the people that are watching in layman's terms, credit, 101.
Yes.
And being able to understand truly what is a credit profile, what is credit worth, and how does the credit bureaus work for us and against us.
Yes. So a credit profile is developed through public records.
Okay.
Every address that you ever lived at, every name that's ever been used, just attached to your social security number. The public record system is called eOscar. That funnels information into the systems. Now, credit worthiness or credit worth is once the system or once the company that you want to finance with needs to determine who you are as a payment payer, they use a system, which is the FICO system. And they actually pay for the version of FICO that gets their client approved. So that public record, that's your credit worth. Now, the credit bureaus, how do they work against us and work for us? The credit bureaus at the core are set up to actually help you. Because there's different scoring for different purchases.
Right.
So for example, if you wanted to buy a car, there is a car credit or car worthiness credit generated for that. If it's a credit card, same thing. It's another system that generates that score. And if it's a home, they also have another scoring system. So they layer it depending on which purchase you're gonna do, which is why I'm saying that it's set up to help you. Because if not, if it was just one blanket, then it'll be harder to figure out the financing piece, not only for the company, but also for the general public.
Wow. Okay. So that is a myth. The credit bureau is not meant to work against you, but for you. And that they have set up already on how they will layer your credit or layer your purchases and be able to help you to maximize your credit score.
And to add to that, in my view, United States of America has the best credit system. Period. It's our country is all about capitalism. It's the flow of money.
Yeah, that's true.
And in my view, once again, the way that lending happens, the way that credit cards or payment history of any kind, cars, whatever, homes, whatever it is, when you leverage these dollars to systems that give you points or credit for that, the benefit of knowing how to do what to do, it turns into this fun simulation that gives you so many benefits, so many cash back offers, so many. If you're paying lower rates for everything that you do, you have lower payments. So it's not about making a lot of money. It's not about challenging your jobs to pay you more.
Yeah.
It's more about leveraging or understanding what platform to be a part of.
Yeah.
And it almost feels like free money sometimes.
It's all about, and what we talked about previously is not about what you make or how much you make, but about how you manage that. And now being able to say how you leverage what you make.
Yes.
I like that. I like that. So you hit a little bit on the FICO score. Now that's something completely new to me.
Yes.
And I'm sure new to our audience as well.
Yes.
So I really want to get your insight on the FICO score and how that works as well.
Yeah. So again, FICO has lots of versions of that system. It's going to be FICO 1 through 10. And what I alluded to in the previous question was anyone that has a product that needs to be financed, they have to, part of their business plan is who is your customer base.
Yeah, it's true.
So car business, who is your customer base? Well, we sell used cars. So if someone had a bankruptcy or someone had slow pays in the past, a repossession, we need a version of this system that can still get them approvals. So if that's the case, then that company needs a lower end of the FICO system. They're going to need probably a FICO 3 or 4 because the lower ends are more forgiving.
Okay.
Now, what to add to that is that if these versions are forgiving, you're going to pay more interest rates. Now, if I switch to home ownership becomes a different finance option because you have to clean up a lot of stuff that you've done, or you get credit for things that you did correctly. Now, certain lenders for homes, they're going to use a higher version of FICO because you cannot bring all of that into buying a house.
Yeah.
So that's like a snapshot on how FICO works, or companies really is what drives FICO because they're the ones that have the product that you go into.
Okay.
So that's how you have to look at it. Not the FICO system, but the companies that you're going to.
Right.
What version do they have? And if I determine that their version is low, you really don't. You want to look for another option because paying that lower end of FICO, higher interest rates, it won't allow you to leverage the monthly payment to actually build points.
Okay. So I have to ask.
Yes.
And this is a little off script, but I have to ask.
Yes.
So knowing that now,
yeah,
and understanding what we just discussed about credit and credit worth and the bureaus, is there such thing as good versus bad credit?
Yes, because it's a reporting system.
Okay.
Now, in my car buying service, which I didn't introduce that to you guys, but I have a car buying service that I work with clients nationwide to find the best vehicle solutions at the best prices, of course. And the reason that I do that is because even if the credit is, like you say, bad, there's still a leverage there, but you need a driver
Mm.
The driver is a high ticket item.
Okay.
In our parents' days, you can build credit for buying furniture.
Yes.
I don't know if you guys heard it. You go buy furniture, right?
Yeah.
Because the furniture was probably a couple $1,000s,
Yeah.
and then you'll make a payment on that. But then the car, though, is even the bigger purchase. So you can take a bad profile and make it good. Because what happens is you can attach like a newer car, like a 2019 or 2020, that car finance situation is going to go to a higher version or a higher version of the FICO system.
Okay.
So you can take a 530 beacon score and then have them pay on this car for a year and then do a refinance with a credit union or another lender, and you can give them 100 points just on something like that.
I've definitely seen that done before.
Yes.
I definitely have
so
seen
good
that
or bad,
before.
it doesn't. You can clean this up regardless, but the kicker is what version of FICO are we going to leverage the payment through to get the lower rate and also points for doing it.
Okay. I'm sorry. I had to ask. Because it was definitely mind blowing for me.
Yes.
Now, and I guess to reintroduce for those of you that are just not joining us, we've been talking all about credit, like start to finish, exactly what credit is, talking about your passion and how you develop this wealth of knowledge and how you impact and share your wealth with other people to be able to invest in them and empower them to seek out more and to have more and to really, like we've been talking about this entire season, to bloom and to really establish and develop a wealth. So if you are just joining right now, make sure you go back and start from the beginning because you're missing some good things. But to continue the conversation, and you kind of mentioned this as well, in regards to elevating your credit profile, in regards to having this performance improvement plan, how does that process begin? What can people do to elevate and to improve?
Yeah, so I'll give you examples because remember, I'm a car guy, which actually, without being a car guy, I never would have discovered this. But for example, you have two things to do. I need reliable transportation so that I can make it to work. But also, I want to buy a house, but I only have this amount of money. And I don't have enough credit to do it all. So what I've learned was you can do both. We can take the money that you have, and in these cases, people have between $5,000, $10,000. I can buy you a car because I have a dealer's license. I'll buy your car at a low amount, and we'll take that title and take it to a bank and do what we call a collateral loan. A collateral loan will not only give you more money than you spent. Because a car can be worth $7,000 wholesale, but the lender will lend you $14,000 as a retail option. So what we do with that is handle both of your issues. Plus, within that amount that vehicle's worth, you take money from there and then you put it into the debt that you owe and try to get it down to 50%. So if you think about what I'm saying, I took one amount of money and then I was able to double that amount through a driver, which is a high ticket item of a vehicle, put it into a bank's language of personal loan. So having that said, the benefits of that is you have now a payment history that you're gonna leverage through a higher end of the FICO system working for you. You found another few $1,000s to manage your debt, and because you did both simultaneously, it has a positive impact on your credit.
Yes. That's good to hear and see. And like you said, something that you provide, which is a plan, an action plan.
That's correct.
For me, I'm big about working backwards. So when I set a goal,
Yes.
my goal will start here, and then I will work on my blueprint of how to get there. But it's all of these steps that I have to work on simultaneously, like
Right.
you said,
Yes.
to be able to make and create a positive outcome.
Correct.
So that's definitely a good picture and a good example that I'm sure that a lot of people can relate to. And as we kind of wrap up, I wanted to address how would people use their credit worth,
Oh, yes.
their credit profile,
Yes.
to be able to leverage, to develop as a byproduct,
Yes.
to establish wealth.
Yes, that's such a good question. Remember I told you about the finance advisor
Mm-hmm.
that doesn't want to talk to someone with credit card
Right.
debt.
Right.
The way that you do this to build your profile is as products.
Okay.
There's products out there that you put your money into.
Okay.
We know about stock market, but I'll give you a better example. Is something like life insurance.
Okay. Yes.
Life insurance is becoming a popular conversation because it can work,
Mm-hmm.
but they're missing a piece that they're not disclosing. But what life insurance becomes is a vehicle to protect your home. If something happens to you, then you get money back. Now you got half of your income now,
Right.
but then you get life insurance check, which helps you with the house, your business, and things like that. The second part of life insurance is they now have an investment side of it, which they promote as index growth, and that just takes a part of your payment and then puts it into the market, and then it has a yield, which means you can start building a portfolio.
Wow.
Now, what's missing, the reason I brought up life insurance, what's missing is they don't tell you that your index amount is going to generate based on your credit worthiness.
Okay.
Okay. The other part about building wealth is assets.
Yeah.
Like I described to you, I can buy a car. I can spend $10,000 on a car, paid off. If I need money, I can go get a personal loan on this car and get more than my $10,000.
Okay. Yes.
You see?
Yes.
So you start products, stock market, life insurance, index, and then having a title to a car.
Yeah.
And just to add to that, when you do these things and build points, we're now able to handle our other side that we don't talk about, which is us wanting to be business owners.
Yep.
When we become business owners, you need money. And most people look for grants, and they look for something exists to help me out. I challenge that and say, hey, because you have built and established your credit score and you have an asset, you can now get be the co-signer of your business loan because of these pieces. So now you don't need, to find a grant, or you'll come back to that.
Okay.
But the equipment that's needed now, just to launch, just to get your business cards, the market, that $10,000 car that you paid that can give you $15,000, $18,000, that's the back door.
That's good. That's real good. I like that. That's real good. That's real good.
Yeah.
I love how all of these small pieces and components, doable, action plan, components and pieces all come together and work in a motion or a transition to be able to allow you to have something to leverage, allow you to have something that's going to give and yield, like you said, a positive outcome.
That's true.
And then ultimately something that we keep going back to, something that you can transfer, something that you can pass along, something that you can build up on and share with your community, with your family. Have those assets that you can pass along, things that people just aren't thinking about as we should, and as often as we should.
Yes, and a lot of these things that I've come up with is self-taught things, and I think that is also a disconnect to, like you said, our communities, or someone like being in the industry for 25 years that just so happens to be all about transactions, all about leveraging money, all about when I got good credit, what you gonna do for me?
Yeah.
These thousands of transactions, these thousands of people that I've talked to get an insight on what they're doing. That is how I'm able to talk about this, which is why I start offering a service so that we can put these things on the table, brainstorm them, but then we also have a route to take.
I like that. So for every talk guest that we have, and how we wrap up each and every one of our shows, is we discuss or we share what is called our testament for today.
Okay.
Now, you have provided a wealth of knowledge.
Yes.
Plenty of gems that I'm sure y'all gonna have to go back and pick up. You may have to watch this episode a couple of times, and it will be available on all of our social media platforms so that you can grasp them and not just have the education, but the literacy as well.
Yes.
But in that, your testament for today is, what would you like our audience to take from today that will leave an imprint from here on out?
Yeah. That the biggest part of this is that we're in control. Nothing's working against us. It's actually set up for us. But we have to understand or ask questions and get our minds wrapped around the way that we should flow or patronize companies. And the other piece to doing that is we're gonna be able to basically make our community stronger too by doing this. So be purposeful in making this finance, being more finance literal, because it is thousands of dollars that we can infuse into our communities. We don't have to wait for the government or anyone to jump in here. Neighborhoods that thrive, they understand some of these things. And they make sure that they patronize things that they want in their communities. We have that same power. So the biggest thing is raising your hand, challenging someone like myself to extend the conversation, and also other people that know about. Sit down with your local banker. Ask them questions about investing, and what does that mean. Ask your realtors do they have other mortgage companies that can sit them down. Always ask questions. Go to the source. No third party. Go spend the time and study this. You'll see that it's a instant bonus, instant money maker, and it's just gonna help us be more confident, us be better, us be healthier. And that's going to bleed into our communities.
I like that. That is good. That is awesome. This has been a great talk time.
Yes.
I appreciate all that you have given me.
Yes.
To build up on, and gems that you dropped for me to follow up on and add to my action plan, but also what you've shared with our audience today. Please let them know how they can find you on social media, how they can be a part and share in business and transaction with you.
Okay, so my Facebook is Clark Auto Group, and also it's a few Clark groups depending on what state you're in. But my bio has a black Cadillac SUV. So Car Auto Group, black Cadillac SUV. Also with my car buying service, my website is www.clarkwheels.com. And that'll give you some more information about me